Welcome and thank you for joining Seyfarth's webinar, Global Reductions in Force, Practical Do's and Don'ts from the Frontline. All participants are in listen-only mode. You are encouraged to submit questions throughout the program through the Q&A section located on the right side of your WebEx window. We will do our best to get to everyone's questions. Any unanswered questions will be followed up by email after the webinar. For those interested in CLE Credit, an attendance verification code will be read during the presentation. Please write this code down. It will not be repeated and it is required for CLE Credit. Copies of this webinar recording and presentation materials will be distributed to attendees in the following days of the webinar. At this time, I'd like to turn the program over to Caitlin Lane. Caitlin, you may begin.
Thanks, Sophia. We can go ahead to the next slide. And one more. Perfect. Oh, back one. Great. Thanks, Sophia. Well, welcome, everyone. Thanks for joining us today. I'm joined by my colleagues and partners, Anna Sid, Lawrence Harvey-Wood, and Sophia Bargolini. And today we really want to talk about some of the practical do's and don'ts that multinational employers really should be thinking about when considering a reduction in force across their workforce. These are kind of practical things that we've been seeing. We do these types of projects as part of our day-to-day. They've been a really hot topic type of project recently, and so we want to talk through some practical things that we're seeing. So the top of the agenda, we want to talk about project planning considerations, business rationale and selection criteria, timings, and costs. Next slide, please. But before we dive into those topics, let's set the stage a little bit. I think it's helpful to talk about the current environment and a little bit of what we're actually seeing on the ground. As I'm sure most, if not all of you, see in the news, it seems like every time you open a paper or click on an article these days, another company is announcing reductions in force, sometimes locally just in the U.S., oftentimes globally across multiple countries, outside the U.S. as well. And we're seeing this from the back end and the legal end. And what we're seeing is that when companies make a decision or start to plan, they want to move fast and they want to impact a significant number of roles. And oftentimes, one of the other things that's really important is that they communicate the message globally. But with these priorities that the business may have, we're also seeing some pitfalls. Because companies are wanting to move so quickly and wanting to reach these business objectives that sometimes they fail to consider the nuances and local requirements in the various jurisdictions around the world. I think if there's one takeaway today, it's that one size does not fit all in terms of process for undertaking these reductions in force across multiple countries. Got some examples here, and we can talk about those in a bit more detail, but things like not having a clear business rationale or starting execution before a plan is really in place, failing to consider alternatives and not preparing for what the true financial costs may be. Those are some of the things that we're seeing happen when there's a lack of advanced planning and not just planning, but thoughtful strategy in going into how we think about these reductions in force on a really global, multi-jurisdictional basis. Next slide, please. So the first topic we'll talk about is project planning considerations. Next slide. So I think a question is, how do we help companies reach their objectives while avoiding the pitfalls? I mean, it's really quite a balance, right? Because businesses have objectives that they want to meet and they have to meet. But then there's the legal side, and we want to find a balance that works. And so one of the really important things is preparation. It truly is key. Having a plan in place that takes into account the local nuances, such as business rationale and selection criteria, whether there's any Works Council consultation requirements, and how those factors impact timeline is really critical. Oftentimes when businesses have an end goal and an objective, the timeline is one of the most important things. It's often a question of we need to have these people off payroll by a certain date so we can recognize cost savings next year or next quarter. And so preparing has a massive impact on timeline, and that is often really important for the business perspective. Another piece that's so critical is communication. So messaging is really critical, and oftentimes that one-size-fits-all approach really is not only may not work, but can be problematic. For instance, if a decision to undertake reduction in force actions is subject to Works Council consultation in one country, it could be very problematic to announce that a decision has been made to restructure without any sort of caveat or clarification on the country where the decision has been made, or that the decision has been made only with respect to, certain units, but is, of course, subject to any sort of Works Council obligations. So making sure that the communication is clear is also really, really critical. And of course, there's external communication to employees, and there's also internal communication to various stakeholders. And so having a clear plan as far as those communications up front can really help manage expectations of all of the interested parties throughout the entire process. Controlling costs is also something that's really critical. Understanding budgeting impacts up front helps, of course, avoid going over budget in the back end, and it helps for proper budgeting at the outset. Budgeting can also impact approach. So for instance, if a company is deciding whether to take a unilateral versus a mutual separation approach, a mutual separation approach may cost more, but the decision to take this approach may be influenced by, for instance, the strength of a business case. So, and even where there is a strong business case, there may be, for instance, some countries where it's the market norm to offer something additional, and employee expectation may be a driver into cost considerations. So ensuring that these costs are being properly accounted for in advance is really important to do, and it's often a very country-specific exercise. And of course, very important to avoid business disruption. We want to plan and strategize in a way that maximizes continued employee engagement, particularly with those people who are retained after the actions take place, and of course, avoid any sort of litigation or strike risks. Next slide, please. Planning and strategy development is also really critical when there are other business considerations in the wider business activities that you may think have no impact or are a separate project, but actually they can really impact what you're doing from the risk perspective. So for instance, one consideration is where there has been or potentially will be M&A activity or any sort of transfers of employment between entities. So in certain countries, particularly in Europe, automatic transfer legislation can provide for dismissal protection, and it can make a redundancy termination more difficult in circumstances. And so part of the planning process is to look at that bigger picture and understand what other actions have occurred, what's being contemplated, because this can really impact approach and timing and when you go out to a works council, or how do you stagger your approach. And so understanding kind of that bigger picture really matters. Another example of this, kind of practical example, is how it relates to employees that are selected and an applicable selection pool in countries where that's required. So for instance, if there are a change of employer or companies being merged, this could have an impact on requiring a larger selection pool than perhaps that original group that you had looked at. And there's business changes that can also impact, for instance, applicable headcounts that need to be considered. Typically we're looking at what is the headcount in an entity, what is the proposed impacted headcount, are we triggering collective or mass dismissal processes? And if we're not looking at the right headcount numbers, that can be problematic. And so understanding these larger processes and anything else that's going on in the business can really have an impact. So I think big takeaway is not looking at these actions in a vacuum and really kind of understanding the whole landscape. Next slide, please. So when we think about, I keep talking about it's really important to analyze and strategize, but how do we actually do that? And so a lot of times the starting point is questions for the central project team and questions for the local HR teams. And when it comes to questions for the central project team, and those are your stakeholders who are kind of running the global project, it's really important to understand the drivers behind the activities and identify where one action could clash with another. So things like we were just talking about, a redundancy versus a business transfer, or where there's a consultation requirement versus simply being able to announce a decision. And control over communications, especially written communications, because obviously things that are in writing can come back around. It's really key, and the information is of course likely to be shared widely, and any sort of inconsistencies can increase the legal risks. So it's really important to understand what the goals and the priorities of the central project team and those stakeholders are, and to really understand what the priorities are so that the strategy and the business plan for how do we execute aligns with not only the law, but making sure that those business objectives are met. Next slide. And then, of course, there's questions for local HR, too, that go into the planning process. And so local HR tends to have a stronger grasp than perhaps a more global project team on what is kind of the local landscape. And it's important to understand for planning and implementing purposes the right level of information. And so there may be, for instance, information that varies by countries. And so oftentimes we see clients who go out to their local HR with, say, a data spreadsheet. We're trying to gather information on these various data points in a country to understand our plan, but sometimes that one-size-fits-all approach doesn't work. Some countries you may need to select based on different criteria, or you may have a collective process triggered in one country, but not another. And so understanding the information that actually needs to get gathered is really important. And, I think getting that pulse from the local teams and understanding, what else has gone on here? How have you handled this in the past? I mean, employees will know if there's been a precedent for how these have been handled, particularly if it comes down to a pattern of payments. And so we wouldn't, for instance, if it's well known that the company historically has paid a certain amount, it can lead to a more problematic path if we pivot from that. And so it doesn't necessarily mean that the pivot can't happen, but it's important to understand the historic context because it really helps to develop a proper plan for execution. Next slide, please. So why does this all matter? Why is preparation of a cohesive strategy in advance so critical? And I think the bottom line is that the consequences of getting it wrong can have a significant impact and can result in failing to meet the business objectives in the necessary time frame, which ultimately has a cost to the company. I think I mentioned it at the outset, but if the company needs to have the actions done by a certain timeline to be able to realize the cost savings, and the timing's not planned out properly, that can have a big business impact. And then, of course, there's significant risk of employee claims. You can have claims for not only monetary compensation or fines, but also reinstatement. So certainly if the objective is to reduce the number of roles and it's done improperly and everybody gets reinstated, well, that's not achieving the business objective. And so that can be problematic. And I think it is worth mentioning, too, that the PR risks are very real. These days, employees can easily post or tweet or share about their bad experiences in an instant. And that can really have a true effect on a company's brand and how they're viewed in the marketplace. And so I think it's just really important to understand that there's a lot of nuances that go into looking at this from a global perspective, and looking at various countries, because each country has its nuances. You know, regionally, are there similarities? Oftentimes, yes, but each country has its own laws, and so it's really critical to not only know what the laws are, but to understand what the practicalities are, and to take it that one step further to say, here's what the law says, but how do we then apply that in a practical way to reach our business objectives? And that's really what we do, and what we want to share here today. So with that, I will turn it over to my colleague Lawrence to discuss the business rationale and employee selection obligations in more detail.
Great, thank you, Caitlin. So business rationale, selection, in other words, why do you want to make these job cuts and how do you propose to actually implement it? So if we take the next slide and talk first about the business rationale. Of course, the level of justification for dismissals that's required by law depends greatly between different countries. So at one end of the spectrum, in a few countries, like in the Middle East, you just don't need any justification at all. Most other countries, at minimum, you're going to have individual discussions. You're going to explain, at least orally, to individuals why you plan to eliminate their role. In the UK, you have to make sure that your explanation of the job cuts is based on objective business reasons rather than purely whimsical. And then at the other end of the scale, in some countries, and depending on whether you have a works council or other employee representation, you may need to draft a very detailed note to the works council in which you analyze financial data for the local company for the last 3 years or so, with a view to trying to demonstrate either that the business is losing money or that it's losing market share. Basically, typically, you're trying to demonstrate that the business is not sustainable in its current form, and therefore that the restructuring you plan is necessary. Do you need evidence to back that up? We can go back for the moment, thanks. In terms of evidence, not necessarily is the short answer, but I mean, especially in countries where the economic test is strict, and especially in a configuration where you have a works council that has a legal right to appoint an external expert, an accountant, paid for by the company to come in and ask lots of awkward questions of management. They normally have a right to ask for voluminous documentation. So you need potentially to have a lot of financial data available. You know, what you used to draft the justification, you may have to make all of that available to the employee representatives so that they can look at it and challenge it. Now, in terms of the substance and scope, usually you're looking at the business situation in country, locally. In some cases, you might also build your argument based on the global situation. I mean, the worldwide health or otherwise of the group. As a matter of strategy, when you're preparing your business rationale country by country, you may start from a common template, but you need to make it local usually. And therefore, you need to be sure that you're being consistent. So basically to make sure that you're not using an argument in one country that contradicts what you're saying in a different country. And equally, you need to take a look around, you know, what has been announced to investors in the last year. If it's a public company, you don't want to find that your business rationale is contradicted by recent public statements or indeed by recent investment decisions, that kind of thing. In some countries, the economic rationale involves also explaining to employees or their representatives that you looked at alternatives to try to avoid dismissals. So maybe that's short-time work or offering a voluntary severance package rather than implementing compulsory dismissals. in which case you explain why none of those solutions is appropriate in the circumstances. If we move now to the next slide, please. This is just a very simple example of a so-called RAG, red, amber, green analysis that we produce sometimes for our clients to help them kind of visualize and work out priorities country by country. Where is it going to be quickest and easiest to have a viable business rationale, which means from a legal perspective, at least, we're on solid ground to justify making these job cuts. So as you can see on the right, the usual suspects, including France and Southern Europe, where the test for economic grounds and the extent to which you need to put in preparatory work to document your rationale, these are likely to be the most challenging countries. And an analysis like that, part of it can also involve taking into account whether in a given country, if you have a weak business rationale, does that make a difference? Does it radically increase, for example, the amount of damages for unfair dismissal? Or even worse than that, does it actually make it nigh on impossible to implement the dismissals? So the answer isn't the same country by country. You know, there are some countries, and this will also potentially depend on how many job cuts you're making, but on a large collective dismissal, in some cases, you actually need express authorization from the local labor authorities before you can implement any of the dismissals. So strategically, it's important to identify challenges like that, because they may affect the planning of, you know, which countries do you concentrate on first, and potentially do you scale down a collective dismissal in one country so that you're below thresholds where you need authorization from the authorities. Let's turn now to look at selection questions. So generally, in practice, can we move to the next slide, please? Generally, of course, the business will come up with a list of names of employees in scope. And so typically, you then have to work backwards to see how you can justify those selections from a legal perspective to the extent required in each country. And here again, there's sort of a spectrum in terms of how great, if any, the local requirements will be. So in the US, at minimum, you'll need to check whether employees have a credible argument that they've been selected in reality due to some kind of illegal discrimination, whether that's gender, race, disability, or some other prohibited criterion. Beyond that, well, somewhat similar, I suppose, APAC and Latin America. There too, if you leave aside discrimination issues, then typically there are either no or very few rules on selection. You're pretty free to do what you want in terms of who you choose. But at the other end of the scale, and in most European countries, indeed, some exceptions like Ireland, Spain, and the UK, you have to take into account so-called social selection criteria rather than just work-related issues. So typically you may have to take into account employees' age, the number of dependent children, single parent status, disability, things like that come into play. There's often some scope for the employer in terms of flexibility in deciding how you weight the different criteria. Typically you do it by using a points system. So, I mean, as an example, in France, there are 4 statutory criteria that apply unless you have a collective agreement telling you you have to use a different approach. But the statutory criteria, you've got seniority, family situation, social characteristics, so that could be age or disability, anything that makes it more difficult for an employee after dismissal to find new work elsewhere, and professional skills. But as I say, you can choose how to weight those criteria. The caveat being you have to do it in an objective way, and you also have to do it in a way that is going to genuinely take all 4 into consideration. You can't weight professional skills so heavily that in fact the other 3 criteria don't change the outcome at all. Just to backtrack as a reminder, of course, this whole question of selection, really it applies where you have a selection pool. And by that, basically, I mean where you have a group of employees whose duties are sufficiently similar that you could consider the employees broadly to be interchangeable. So any of them could do the other's job, maybe after some short-term training to adapt to it. The point being that if you are eliminating so-called unique roles, or if you're eliminating all the roles in a given selection pool, then of course you shouldn't have selection issues to contend with. Could we move to the next slide, please? Here, just some examples by country to illustrate the spectrum. So, as I said, in the UK, you only use work-related criteria. In the middle, in France, as we've just seen, you have to take into account both work-related criteria and social criteria. And there are some countries like Italy or the Netherlands where normally you only take into account social criteria, although I think there can be some exceptions if there are critical skills, that type of thing. On the subject of selection, do keep in mind that there are some employees who will be protected from dismissal under local law, and that may mean absolute protection. So a common example is employees who are pregnant or on statutory maternity leave. Or it may be relative protection, by which I mean it's not that you absolutely can't dismiss someone, but you may need a specific procedure. So for employee representatives in some countries, you need authorization from the local labor authorities before you can dismiss them. Finally,
I just wanted to hop in, and I think you raise a good point there, and it's a great example of what I had mentioned earlier about getting the right information. So to Lawrence's point, there are different protections against dismissal in different countries. There's different selection criteria, and so part of that data gathering exercise is looking at what is the country-specific requirement, what does the wish list look like, and how do we align those? So I just wanted to circle back on that point.
Absolutely.
I think it's a good illustration.
Thank you. Yeah, and similarly, an information gathering point that can affect your timetable. I mean, in a country where you have to take into account how many dependent children people have, whether the employee is a single parent, stuff like that. Some companies, they simply don't have that information, in which case you have to build into your timetable a couple of weeks or so you can send out a questionnaire when you've finished consulting the Works Council, asking employees in affected departments or teams or whatever, asking for that information so that you can apply the statutory selection criteria properly. I think that's it on selection. Just to say, when you've applied your selection rules, in many countries, you have some kind of redeployment obligation before you dismiss. So you typically have to be able to show that you made reasonable efforts or extensive efforts, perhaps, to search for vacancies, at least within the country in your group. In some countries like the Netherlands, you actually have to search worldwide for suitable vacancies. So that's an important step after selection before dismissal. We will move on now to the next slide, please. And I will hand you over to Anna.
Thank you, Lawrence. So in terms of timings, what is relevant to take into account when doing a reduction in force? We have touched upon some of these in the planning section, especially by Caitlin, but also Lawrence. But we have flagged in the next slide, please, some of the variables, some of the topics that are relevant in terms of putting a timing together and planning properly how long the process is going to take. So the first thing I would flag is you have to make a decision on whether to follow a formal procedure and whether this is going to be individual or collective in the countries that have a special collective redundancy process, or if you have the option to follow a more informal procedure that generally is presented by form of mutual separation agreements. The key decisive factor is how fast you need this to be done and how much you want to spend. So, speed and cost are something that has to be balanced. And normally, if you want to follow the informal process and get the employees to agree to leave, then that will involve higher cost. So the faster you want to move, normally the higher the cost, and the other way around. If you have more time, you can plan and work in the rationale and do all the consultations, and maybe that can also balance the cost. And I say maybe because sometimes the costs are stated by the law and consultation takes longer, and then you also need technical reports and all the costs that a collective process might trigger. So a decision on whether to follow the formal or informal process, and also what the priority is in terms of speed or cost, it's a decision that is important to take at the outset. Then, as Caitlin was saying, it's very important to get some facts and gather as much information as possible, because this will also be very relevant in terms of timing and how long the process is going to take. So first, the numbers of employees locally. The thresholds for a collective redundancy are generally calculated are pretty much always calculated based on the number of employees in the company and the number of employees affected. So we have to understand, what are the numbers of the legal entity in the country, and out of those numbers, the percentage or the minimum number of employees are being affected by the terminations, and whether a collective redundancy or mass redundancy process is required or not. And this is also relevant in terms of understanding how many legal entities you have, because sometimes companies operate with multiple legal entities in the country, and they might be a risk of joint employer. So that is also information that is relevant, because even if you understand that the legal entity doesn't trigger collective redundancy, it might be that when you get all the information, two legal entities are acting as a joint employer, and then in fact you are reaching the threshold, or you're having a risk of collective redundancy being triggered. And again, more consultation, more information, and more time. Another important fact that needs to be understood is the recent terminations, and this is also important because it might be aggregated. So the previous terminations that have been taking place in the company might have to take into account for the reference period in order to understand whether the threshold for a collective redundancy is being triggered or not. And so if triggered, then the longer process might have to take place, and it will have an impact on the timing. Local employee representation. In the countries where there's a collective redundancy process or mass termination process and consultation is needed, you also have to factor in the timeline that you might need to give time for the employees to organize themselves and appoint a representation, either through the union or either through Works Council, or appointing the representatives specifically for the process. Prohibited lockout, yes, this is also linked to the previous notion of recent terminations. Obviously, if there has been a previous collective redundancy process, it might be by law or even by the agreement that was reached in this previous process, some periods where there's a ban for making terminations in the company, and therefore, if there's any of those periods agreed in the previous exercise, then you might have to wait. And therefore the process might be extended. There are also some employee relations sensitivities, or even some company sensitivities, like do you have employee representative selection in place? So that might not be a very good moment. Like if there is already some union movement because the elections are taking place, then asking them to speed up because you need to take action on the reduction in force, then might not be a good moment. And also some other decisions that might have been taken in place in the company, like there was a salary cut, asking the employees to make an effort to avoid terminations, and then immediately after making the terminations might be something that time-wise not be ideal. It might make the process more difficult, so it might be a good idea to wait a little longer, or, as Lawrence was referencing, public statements, public announcements given to the shareholders, like you're giving contradictory information, so maybe you want to give a bit more time to justify that situation has changed. And then another thing that it's also important is notice period. So, and I'm saying it's important because some countries will allow for pay in lieu of notice. So you might have some notice periods stated either by the law or by the collective agreement or individual employment agreements, but other countries just don't permit it. So there's a limitation and employees have to work through the notice. And that means obviously that the terminations might have to be delayed in the countries where pay in lieu of notice is not possible, or in the situations where you're planning to save some costs and you don't want to pay up front the notice period. And obviously the timing will also impact on, some countries don't have the notion of the garden leave, so the possibility to ask the employee to be on paid leave without working during notice. And that is something that is important to understand when you need the employee to consent or it's just not possible at all. Or, during the notice period, if the employees are working, then you might want to set up a plan in terms of production needs to see, the impact that it might have. Because obviously, if employees are working on notice and they know they're going to leave the company, it might not be the best moment to reach an excessive workload because you want everyone to be working very hard, because that might not be the case in those circumstances. So moving on to the next slide. Another issue that is really important in terms of timing is the possibility to delay the terminations in order to avoid reaching the threshold for collective redundancy. And that is obviously in the countries where you have these mass termination obligations in terms of doing a proper consultation with employee representatives trying to reach an agreement, and that also triggers notices to the labor authorities. Sometimes approval from the labor authorities is also required. Then it might be a good idea to plan in advance and understand if that threshold is clearly being reached, and therefore you just have to follow the process, or if you have the possibility to delay some of the terminations and have a staged termination process where you can avoid this collective process and rather go for a more simple individual procedure. That also entails some risks, and countries have different periods where you have to look at to understand whether it might be aggregated or not. So we have 30 days for France, Germany, and Czech Republic, to give a few examples. But in Spain, the Netherlands, and the UK, the reference period would be 90 days. So you need to have 90 days blank before starting a new process. So you have to look at the back, and as I said, there might be look-up periods for initial procedures and also some legal periods where if you take any termination, it would be considered like in fraud because it should have been included in the previous collective redundancy, or if the previous redundancies were individual, then it might be also declared fraud because it should have been taken as a collective redundancy process. So even in those periods where you are planning to separate the terminations, to do these staged terminations, staggered terminations, to avoid the collective redundancy process, there could also be risk if it is understood that the company has, clearly planned. So it was very obvious since the beginning, company wanted to reach the number of terminations that reached the threshold, and it has just delayed some terminations to avoid the process. That would entail risk in some of the countries. So in those cases, the best advice is try to look for different business justification so that, it is not clearly the same process, it's just different grounds. And if it could be triggered it could be built into different types of termination, like voluntary terminations, employees resigning, mutual termination agreements, or some other sort of terminations like performance related. The more this can be separated and differentiated, the easier will be to explain that this is not really company acting in fraud and trying to avoid the collective redundancy process with the rights that the employees will have in terms of representation and having employees, representatives, and unions fighting on their behalf. And it was just a genuine termination given through different grounds. So in these cases, it's even more important to do a proper analysis and to understand what the company priorities are, to have very clear planning and obviously sensitivity of this matter being kept very confidential to avoid the risks that this would entail. So as a takeaway point, staggering the dismissal dates can avoid the collective obligations, but it might need different justifications and different grounds for the termination. So it's even more important to understand this at the outset to avoid any further delays, because, you know, in terms of timing, if the process is not done correctly from a formal standpoint, as Caitlin was mentioning, it can have consequences as bad as having to reinstate everyone with back pay, which is obviously the opposite intention, where all the process starts with at the beginning. And with that, I'm going to leave it to Sophia to do the next section.
Thank you. Thank you, Anna. So we are now having a very quick overview of costs, and we will understand together how a proper budgeting may have an impact on the overall operations. The impact of costs may be huge because an incorrect budget may lead to problems, to disruptions, and it may also affect the timing of the plan reduction in force. It is so essential that you're guided through the different normal actual costs that you will face, as well as you're aware of potential risks into the negotiation phase or when implementing the plan that may lead to additional potential costs. Can we go to the next slide, please? Here you can see actual cost and potential costs. Obviously, the costs vary region by region and country by country. However, what we can, as a quick overview, we can see that there are severance payments provided by some countries, like legal minimum severance provided by the law, or it may be provided by the collective labor agreement, or we may face company policy or previous practice that we should take into consideration when preparing a proper budgeting for our operation, for our projected reduction in force. Obviously, when dealing with unions, costs may normally raise, like it happens sometimes in Italy or in Europe in general, when you have to deal with unions, and the mass dismissal procedure is dealt by negotiating with unions. Social plan, severance package will be increased depending on how the negotiations are going. Depending on the countries, as you can see from the list here, actual costs may be, for example, outplacement services, as well as contribution to the state fund, as this happened in my country, where in case an employer wants to start a mass dismissal process, it has to pay a huge amount to the state for the unemployment benefit, which is like a punishment because you're going to dismiss a lot of people. We should, when planning a budgeting, you should take into consideration also what here we call the internal costs, like disruption to ongoing business, as well as loss of productivity. Enhancing a global reduction in force indeed may lead to fears. Our employees may lose a little bit of trust, or may start looking for a different job opportunity. These all may be taken into account when dealing with, not only the actual cost, but also the internal one. We can have now a look also at the potential cost. So expenses can increase in case we have tough individual negotiations to the employees. In our experience, when an employee asks for more money, then also their colleagues will ask for more money. So having a tough negotiation with one employee may lead to increase and raise the cost in the entire workforce, at least in the same country. Then we must take into consideration as well that if a case ends up into a litigation, when going to court, we lose a little bit control of the budget, because obviously litigation may raise the cost and provide for damages, as my colleagues mentioned before, restatement and back pay. So avoiding litigation is a key and essential point. It is clear, therefore, that having a good budget, planning a good budget to secure the employees' cooperation is an essential phase when projecting a RIF. Other examples of impact of cost are, for example, as my colleagues before mentioned, invalid selection criteria may lead to raise the cost, as well as projecting and planning the timing accurately is essential to avoid having people on the payroll longer than we wanted. Can we go quickly to the next slide? Here you can see the differences between different regions. So you can see how in Europe you will be required to pay a little bit more than in other regions. In the Middle East, for example, you will have to pay severance plus expat costs like the return back flight. And while in Europe, as I mentioned before, the involvement of unions will likely lead to pay more severance and the social plan as well. I now hand back to Caitlin for some key takeaways from today's webinar.
Thanks, Sophia. I know we're at time, so before I give a quick recap, I do want to provide everyone with the CLE code for this session, which is SS, as in Seyfarth Shaw, 2940. Again, that's SS 2940. So just to wrap here, I think the key takeaways are one, to determine those ultimate goals and work backwards. It's defining that strategy up front. This doesn't mean that there won't be pivot points as you start to execute, but having a clear picture and understanding what the path to success for this business looks like is really critical. And then understanding what are the priorities. So are the priorities maintaining good relations, speed, minimizing overall costs? Understanding and determining what's the most important thing to the company will ultimately guide decision points in the development of the strategy that's ultimately used to get to the end goal. And I think we've kind of really given some good examples of why getting the full picture from local HR and the central project team is so important. That information is really key and can have a big impact on the strategy. And finally, to be prepared. While a solid plan will certainly mitigate risk, you know, there are litigation and industrial disruption risks that are real, that can happen in large restructurings. And so managing expectations and having contingencies as part of your timeline and budget is really important. So with that, I know we are at time. I think if there's any questions, we can address those separately by email, but that is it for us. Thank you, everybody. We appreciate you joining us today.